Utilizing chart patterns when you're investing is key to making sure you're buying and selling at the optimal time. Common chart patterns include the cup with handle, double bottom, and flat base. But today we're going to talk about the ascending base, which is a rare but powerful pattern. The ascending base forms when a stock has 3 consecutive pullbacks, each with higher highs and higher lows, kind of like stair steps. And the pattern typically develops for strong stocks in a not so strong market. And once the market moves higher, the stock is free to continue its advance. So let's take a look at an example of the ascending base to explain. Now, Chinese stock New Oriental Education is working on the ascending base with earnings due towards the end of October. New Oriental is a member of the IBD 50 list of leading growth stocks, and it's China's largest provider of private educational services with more than 8 million students through its network of 95 schools. And the stock has done a tremendous job of shrugging off the broader market weakness amid the US and China trade war. And as you can see with this chart pattern, there are 3 pullbacks, each with higher highs and higher lows. Now, a proper ascending base pattern usually develops over 9 to 16 weeks, and this one has been taking shape for about 15 weeks. With the ascending base, each pullback should be limited to no more than 10 to 20%. And it's normal to see these pullbacks take the stock to its 10-week or 50-day moving average. That's the red line on the chart here. Now, this base has formed during a choppy, volatile market, with the retreats coinciding with general market weakness. That's a key feature of this pattern. And once the resistance from the general market disappears, stocks that form the ascending base are free to make their advance, kind of like removing a heavy weight off of a coiled metal spring. And for New Oriental, that weight could now be lifted off with the Phase 1 trade deal between the US and China, but we'll definitely keep an eye on the headlines. If New Oriental tries to break out, look for heavy volume, as that would indicate support from institutional investors. It's also ideal to see the relative strength line, which measures price performance versus the S&P 500, hit new high ground. Now, for New Oriental, its relative strength line is currently just off highs and reflects solid market outperformance. And in addition to the bullish chart, it's of course important to focus on stocks with strong fundamentals as well. New Oriental is expected to see annual earnings growth of 32% this year, followed by another 31% next year. The best growth stocks show annual earnings growth of at least 25% or more, so that's positive here. And with another earnings report on the horizon and progress made on the trade war front, New Oriental has all the ingredients of a bullish setup with this rare ascending base.